Dude. These are up 50%. That's tomorrow's too. Wish I held some dailies. Wow, wow, wee, wow. Oh, I'm sorry. You're right. I guess I'm dyslexic. That's a pretty big catalyst for UPS, so that would be, I'd be careful with that, Mr. Invest, because yeah, UPS will probably most likely have somewhat of a reaction to FedEx's earnings. Look at that rip. SPY's about to fill the gap. That's high of the day right there, I think, or right at it. I'm selling one more. Gosh, these counters gone crazy. There's the gap fill. That's crazy. GME waking up from that? A little bit. Tiny little candle. It's now green.
Has since pulled back, around $93.
Liechtenstein.
Recover a bit here is crude, that pullback, because there was quite the fear as we were running our way up into this $93 level here. The recent
What a
high,
reversal,
another
man.
new high for the year,
The long trade today was actually
and,
bigger, more
looked at
profitable than the
crude
short,
down
which is
only
wild.
3 days since the end of August, Nicole. As
caught
we
the
head
downside.
into 94, a lot of focus on $100 oil. Will we get there? And ultimately, the impact that would have on
That's what you
the
want
indices.
anyways.
But I'm also
You
looking
want to be
at how
healthy.
yields have been on
You
the
want
move
to
higher.
create habits.
Crude's kind of following along with that. I
You
saw
can
Chevron
replicate
CEO,
good trading.
Mike
If
Wirth
you're always
talking
high
about
when you're trading,
$100 oil is,
you learn to only
he
trade
said
that
the
way, and then you
trends
have to be that way,
suggesting
which
that
sucks.
we're on our way to that. He talked about the underlying
Kind of have to
drivers of
call
the
this,
economy
don't
in
I?
the U.S. and how, frankly, well, he said global
It's a huge
demand
pot.
remains pretty healthy right now. Basically, again, suggesting that we will see that triple-digit level here, again, looking at 100.
Right, understood. Thank you for all
He's
of
got to
that.
have a pocket something, right?
And Liechtenstein, important stuff.
Liechtenstein.
90 minutes left in the trading day. Good luck
All
there
right, I need
at energy and the markets overall. And of course, energy has been one of the biggest gainers over the last
I don't know what to
month,
raise here.
right? As we just talked about, getting up to
Oh my gosh.
$93. Joining me right now, Tucker
I
Wilson,
guess I'll just check
President and
this
CEO,
down.
Propane Education and Research Council. Thank you so much for
Fives.
being with us. So,
Oof, that was
your
a huge
thoughts on
pot.
what's going
I
on
could have bet
here,
more.
Because, is it getting a little toppy? That's what one of our last guests said. Maybe
Going all in. It could have pocket queens, kings, could have an 8 out of there. I think diamonds made it.
Toppy, and most of the technical traders, I think, are
Figured you had a pocket, not pocket fives. That raise?
Fundamentals, and I think
You guys are
nothing
crazy.
has changed too much since I was here with you before. Again, the supply is relatively fixed. It's all about the
Yeah,
demand.
Mr. Invest, as
When the
Dink
demand
pointed
runs
out,
up a bit,
FedEx has their
then
earnings
the
tomorrow.
trade runs up and
So
the price moves up. We're kind of seeing right
That's
now
going to
a
probably have an
pullback
effect
in
on
demand.
UPS,
And so
one way or the
I
other.
do-
Just
we-
keep it in
we
mind.
couldn't imagine hearing talk of
You want
$100
to close and
crude
reposition, or
4
you're
months
basically
ago.
playing
But
two
you see us
catalysts
move
now.
through 90s, and at least now
playing,
a lot of technical guys will be talking
FOMC
about 90 as
and
the new floor. So
and
right.
FedEx earnings.
So let's break it down, because nat gas inventory seems to be somewhat normal.
UPS took out. Well, yeah, look at the friggin' SPY.
Diesel,
Look at that rocket.
low.
So
Lower.
this is the time of year when inventory is very important to me, particularly as we think about the U.S. And so that's the first thing I look
Thank
at.
Dink, he
Where
pointed it
last
out.
year,
I-
much different. Right now, natural gas inventory
I don't have
relatively high towards the
all the
top of
earnings
5-year
memorized
range.
like
Propane
our
inventory
man Dink.
sitting really above the 5-year range. So I would say last year, remember
Basically
we
a
were
casino,
thinking about
100%.
how we going to get all this natural gas to Europe.
Yeah, you trim
Natural
some
gas
profits if you
seems
have it.
to
I mean,
their storage full.
no reason to hold
So
through
as we
FedEx.
go
I mean,
ready
you're
into
gonna
the
be
winter,
as long as you're
we see
okay with
great
it.
things
If
for natural
FedEx
gas
rips
and
and cause
propane,
UPS to
both
rip,
relatively inexpensive compared to crude, and probably
is it pre-market?
poised to stay that way.
I would have had a full house.
It's quite
Freaking
different
kidding me?
for gasoline
Let me look it up.
and diesel. Both of them on the bottom of their 5-year averages for inventories.
Browser
You can
getting
take
laggy.
that
This isn't
basket
good.
of crude oil, gasoline, diesel, still relatively low in supply.
Yeah, pretty big. I mean,
wanna
look at the
get
market. Back
questions
to the
about
highs.
tech and innovation and moving this forward, but I am a little concerned about the strategic petroleum reserves. We really dug into those and have not replenished. Is that okay, or do we need to do that sooner than later? I mean, the costs are higher now.
Oh my gosh, look at that
What
flop.
needs to happen, or what could happen?
I think it is quite reasonable to believe that we won't think about refilling it when we're
Should
at
bet more, maybe.
$90. We didn't refill it when
We
it
have
was
to
at
fold.
$70.
Yeah.
So certainly we have to refill
what
it.
do
I'm
we
sure
have?
plans are being made to think about how to refill it, but clearly this isn't the right time. And you know, we'll all see what the winter brings for us. in
All
terms
those
of
kings
demand.
now have a full house. Now you're
That
screwed.
forecast of
Maybe.
Yeah.
El Nino coming.
Maybe you're screwed,
variables
maybe
in
you're not.
play, But we do need to think about refilling that.
Oh,
as
queen?
far
Just try to
sooner
call bluff with a
rather than
queen?
later.
Tell me about, you said Marathon and other major
Wow.
manufacturers are
So I'm just getting everyone to leave this table.
production of renewable propane because the buyers want it. So I like that there's a specific
Alright,
story
FedEx.
with a company, with Marathon. Tell
Earnings
me some of the
are
trends you're seeing, or maybe some of the
post-market.
specific
So you have
companies,
till
things they're
tomorrow.
doing that
You
seem
could
to be
trim
in the
some
right
tomorrow
direction,
too.
in your
Right.
opinion.
And Amir, this
'cause
is
the
climate
FOMC and all
week.
that doesn't
It kinda
happen
coincides
till
with
2,
opening of the UN. So you're really in the
and then Powell's at
conversation about,
2:30.
you know, where are we thinking?
And FedEx
how
is until
energy gonna
aftermarket, so
change to fit
if you want
the
exposure to
climate
FOMC with your
crisis that we're in?
UPS,
I think Marathon is a perfect example. You know, so committed to traditional oil and gas, perhaps lubricants, but they saw the vision. We need to move to renewable fuels. We need to move to renewable diesel, sustainable jet, renewable propane. And when they start coming into the market, they come in a big way. So we're really happy to see these new supplies of renewable fuels that are
so when you leave a
carbon,
cash game,
sometimes negative
getting
carbon.
huge turnover.
So drop in fuels, you use it just like you use your gasoline or diesel or propane.
Hey, I got a pair.
But zero carbon. And that really is the wave of the future.
Yeah, and you know what's interesting, Cortera Energy, for example, we just had a guest on earlier today, Bob Yager from Mizuho.
I don't know why I'm calling. I'll get out. We'll do some tournament stuff.
You know, when he thinks about nat gas, or you know, maybe the XLE was a little overdone when you look at those energy
Pair of tens
stocks.
with a low kicker.
Any thoughts on
Look
where
at these
people
guys.
put money to work, whether it's a particular sector within these commodities that we're talking about?
Well, you know, we
Info
look at
really?
utilities in general. Utilities
Yeah,
haven't
I
been
played.
a great space for a while. But as you think about the conversation here in New York, maybe on a
It's
global basis, the conversation
it's fun.
It's all about renewable power, almost exclusively electricity. And I see that conversation changing.
Yeah.
Certainly
There's some other
natural
strategies.
gas,
I don't.
Natural gas liquids like propane.
I've not played it much.
they're here
I just
to
started
stay
playing
for
a couple
long
weeks ago.
time. I think you can take great comfort.
Try and keep myself from
Consumers
trading in
of
the
natural
midday
gas and
chop.
propane can take great comfort when they see the
And
likes
considering
of
maybe playing
Marathon or
some
Global Clean Energy Holdings
Sure.
actual
moving
tournaments in
to
the
these
midday.
zero carbon renewable fuels.
I think that'd be kind of cool.
You can decide to
Trading in
use
the morning and the
natural gas
afternoon, and
propane
then
today. 15 years,
it's midday.
you'll have an environmentally friendly fuel.
I'm
So
plugging in.
But I don't.
We
I'm
just-
practicing or training or
I've
just
always
learning about it at
liked
this
for a
point.
long time that natural gas space, and companies that make natural gas.
Buy bull flag and still, and it's at the high.
Tell me about
Huge cup here we
Occidental
built.
Petroleum, because you said that this is one of the names that's an innovator with some unique solutions. And you know, when we heard Warren Buffett was heavily invested, it really ran up. It has since pulled back some. The low was $55. Right now it's at $65. But
Well, I
What
like
is
to
it- what
watch
is it- what is it?
Occidental
Yeah, tell
because
me
if
what
nothing
is it you like
beyond the
about the company?
traditional oil and gas, Occidental
Oh,
is
you
really
get good
taking
hands.
this lead in direct air capture. And
The tournaments are
it's a good-
more fun,
direct
probably.
air capture
You don't have to wait as
approach.
long.
Okay.
So
For its
going in
satisfaction.
and just finding ways to remove
Blinds
carbon
up
from
really
the air
quick.
is a
More about
climate
elimination.
Scientists would say that's something we've got to
Just the
figure
cash
out
games on here.
if we're
Sometimes
really
you're
going
just
to
sitting for an
address
hour or
climate
two,
change.
like
It's not just
have it on in
about
the background.
moving it before we burn it.
Because
It's about
since
getting
it's-
it out of the air.
This is just fake money.
really
It's not
taking
like
the lead
people have
in the
anything.
US
They don't
on
care. They'll
direct
call
air
anything.
capture.
So
They're working with
gonna
the
have to be-
government. They just got
gonna have to have something.
chunk of money from the Department of Energy to, and it's a good example where big
tournaments play
scale
quite a bit different though.
is thinking about solving problems on a big scale.
Yeah.
And I don't want to ever bet against Occidental. I think, as you said, you know, Buffett's
Yeah.
made a lot of great moves.
Sure.
There are skeptics to
Could have
direct
folded
air
that.
capture,
Right.
but I think if it's going to be successful, and we're in the early days no matter what.
Right.
Well, I
but
should
think
sell this last
Occidental
call.
is going to prove it can be done.
Yeah, and I see a buy rating here from Mizuho just this week with a buy rating and a $76 target, which is right around its highs that it hit back in November. Just to add a little something for investors. Thank you so much, Tucker. It's great to see you. Always glad that you're here. Have a good time with the New York Climate Week. I know it's UN week overall, and there's a lot of very influential movers and shakers here this week. Thank you.
A lot of nice conversations about Marion finance and the climate.
Sure.
Really interesting. Thanks for having me.
Tucker Perkins, Propane Education and Research Council. Thank you. Much more to come here on the watch list. We're watching AutoZone. It reported its earnings this morning. Our panel ready to weigh in right after this break.
Kind of a bad time for bluffing, but whatever. Gonna get for the hearts. And I missed. Take it down. I'll let him the satisfaction of seeing what I got. Beat him with a kicker. Yeah, I saw that last call. What's up, Sam? DJ. $6.5? What is he doing? Master Zero Day, there's no way they were. Are you talking about SPY options? Good re-raise, good re-raise. Too aggressive? Okay. Dang. Call it. Ah, that could have been the end. Punk. Yep, I gotta do it. Woo. Cameras are fun too because it's only 3 people, it's pretty quick. Wake up by equal parts apart, 0 day strangle, Euro close, enjoy the day. Yeah, I would buy him even later though. Wouldn't if I was gonna do that strategy, I wouldn't do it at 11:30. I'd probably go like 12:30 or 1. I mean, it depends on the price action, I guess. If you're not gonna look at it, sure you can do it at 11:30. If you're gonna look at it some though. wait till,
fourth quarter, it didn't happen. So
sometimes you don't get to move till end of day.
AutoZone's a very well-run company. It's a very well-positioned company, but this weaker commercial sales growth is a blemish on the company and the stock at this point.
And so what was your thought, Chris, when you looked through some of the numbers? I mean, you do have people holding on to their cars for a longer time just because cars cost so much, and also insurance, and the financing has gone up.
Yeah, I mean, AutoZone is one of the best run companies in the resale space, and they're just a solid performer year in and year out. I think investors really look at AutoZone as a defensive investment because 80% of auto part sales are non-discretionary. So if your car breaks down, you have to fix it, and people are clearly driving their cars longer and having an aging fleet out there. So people still need to fix their cars. I do agree that sales have been slowing. This quarter, their same-store sales growth was the weakest since 2020. So they
forgot I was in
have to
small
show
blinds
some
there.
turnaround in the future, but it was a solid quarter, but unspectacular, I would say.
Over 1 year, the stock
I like
is up about 15%,
the strangle at market open.
And I think of what's the other one? O'Reilly
But then you
Auto Parts.
probably want to sell it within
When
the
you look at
first
this
30
one, this
minutes.
looks like
Sell
this
both
chart
legs,
right here,
at least one
year
leg.
is up 34%. Do you like all of it as a defensive space, or is there something, Chris, that you really like AutoZone?
Yeah, I mean, AutoZone and O'Reilly, they're the kind of the best in class of the sector. Right. Advanced Auto Parts has had a rough time. I think they're down 60%. Clearly, they have more of a business problem and they have margin pressure. But
yeah, I mean, you're buying options that far out of the money that short amount of time, like literally a lotto every day.
Since 1998, they've bought back 90% of the shares outstanding.
Can't expect a move like this to happen.
Have a steady business, and they're buying back tons of
maybe
shares.
one in
Tons of
10
shares,
days,
so,
20 days.
It really gives them a good earnings growth story over the long term.
Yeah.
But yeah, you can be successful doing zero day options. That's what we're trying to do.
AutoZone or O'Reilly.
Definitely
Tell me, Brian, which
that's the type of strategy people do.
Do you have buy ratings on some of these?
Yeah, so we're recommending
you can make thousands of percent on daily SPY options.
And look, right now,
usually it's
what I'm telling our clients is
20 to 30%.
I agree with Chris. These are really the
You're practicing good risk management.
The retailers. I think the better nearer term.
If you have a big extended move like this, you can get your 20-30% and then have enough left over to get some that are a couple 100%.
But O'Reilly right now is performing fundamentally better than AutoZone. It is a more expensive stock, but I think for shorter term investors, O'Reilly's the better play.
Yeah, and just give me a couple of seconds, Brian. I'm out of time, but just on the UAW strike, which probably is going to last for some time, how it could affect some of these names in a good way?
Look, I mean, it's obviously very complex. I'll make it quick. But at a minimum level, this could be a positive because what happens is with these strikes is if it impacts the production of new vehicles all the way down the line, that ends up keeping people in cars longer, and they've got to maintain those cars. So that would generally be a positive for names like AutoZone and O'Reilly.
All right. Brian Nagel of Oppenheimer and Chris Wong of Runnymede. Thank you both for being with me. Appreciate it. Good to see you both. And thank you, friends, for joining me here on the watch list. I just checked on CART. 3670 is where it's at right this moment, so off the earlier highs, but still a good gain. I'm Nicole Petalides, every day at 11 a.m. and 2 p.m. here on the Schwab Network. Keep it right here. Oliver Rennick, Market on Close, next.
Five minutes of power hour. Did it. You go all in for this? I thought. Eight, 4. Dang it. The blinds are too big. I had to. That's the minimum raise I can do. Oh my gosh. Let's check this one. I'll bet. Hopefully he thinks I'm bluffing. Yes. Hopefully he doesn't have a 4 though. Oh my gosh, this dude has a 4, doesn't he? Give it to him if he does. Yep. Oh my gosh. Good game. GG. Kept calling. Makes sense. Up, Corey. Queens. 2 pair, 8-9. Good game. Yeah. A 4. I could have bet more aggressive because there were just 1-4 on the flop. At that point, he only had a pair. Thing is he was an easy fold. I didn't want to scare him off. Afternoon. Mine's coming down a little bit here. Maybe making its handle. Could run out of time for all that to play out today, though. He's at the high. What? Birds is resumed, up 72%. Birds acquires Spin, North America's largest micromobility operator by market share. Never heard of Spin. What is this? Please have an ace. Yes. Straight beats. It's 3 of a kind. Nice. Nice.
Let's get nuts!
Let's get nuts. Get that right on time. Oh, dude. Stream just end? What? Oh, that's so weird. It's over on that. Thanks, Corey. Appreciate the dono, buddy. That's my live stream's over. Oh, it made a second one, didn't it? Thanks, Corey. Appreciate the donation, bud. It's so weird. Too small a bet. Spy come back down to VWAP. Get the straight. Yes. Birds up 72%. Wait, I have birds calls. Still way out of the money. These things. You out? No, I'm not out. Is that a min? Is that a min raise? Oh my gosh, hit a full house. Not paying attention. Calls are still down. They're 2.5 strike calls. I think there was a reverse split on it. So these are old 2.5 strike. Fortunately. check it down. Do a min raise, high card. Air 7's not bad. Bad. Lowest pair. Gotta go all in. Yeah, 6. He's getting everything. Every hand he's got a pair.
Right in the middle of your screen, the gap up that took the SMH to about 140. And we're at 145 right now.
That ticker is just hilarious.
At the low end of the range, even though it's been pretty disconnected.
Or a scooter operator
stocks,
behind
it's
spin
been
for
fairly
19 million.
persistent in its resilience over the last 5-10 days. We're not quite where Bitcoin jumped to after Grayscale won its legal battle to debut a spot ETF, but it still is holding on to the 27, 28-ish range. And whether or not
Synergies upwards of 20 million in key profitable markets, including Washington, D.C., Baltimore, Salt Lake City. Combined, Bird will serve approximately 350 markets globally with over 200,000 vehicles. Bird, a leader in environmental friendly electric transportation, today announced it has acquired shared electric bike and scooter operator Skinny Labs, doing business as Spin from Berlin-based Tier Mobility. Transaction makes Bird the largest micromobility operator in North America by market share and is expected to be immediately accretive to earnings. Report of proposed sale of securities? That's not good. Wait, that's old. What? Spin is now wholly owned subsidiary of Bird Rides. The purchase price was 19 million, including 10 million upfront cash, 6 million in a vendor take back, and 3 million as a holdback. This transaction was supported by Midcap Financial Investment. For the 12 months ended June 3rd, Spin delivered approximately 45 million in net revenue, bringing the combined net revenue for Bird and Spin to approximately 265 million for that period. Transaction expected to have upwards of 20 million in synergies and be immediately accretive to earnings for Bird, due in part to recent operational restructuring. Spin, which is headquartered in San Francisco, has a strong presence in North America, including operations in over 50 cities and university campuses with minimal overlap with Bird's existing footprint. Well, that's nice. The acquisition increases Bird's geographical footprint, solidifying its positions as the leading micromobility operator in North America by market share and by number of markets serviced. The company plans to leverage this leadership position to further expand its operations in multiple profitable key cities such as Baltimore, Salt Lake, and DC, one of the top micromobility markets for cash flow in North America, as well as major university campuses such as Penn State and the University of Michigan. Combined with Spin, Bird now operates in 87% of the 50 most populous cities in the United States and Canada that have shared micromobility program. Awesome. Well done.
The excitement, though,
well done.
Although it's still there, it has faded just a little
Calls
bit
are
from
wordless,
the morning
but
because
well
the stock opened up above its IPO price at about $42 a share. The IPO price was $30, and so that $42 a share meant that the valuation of the company was somewhere around $14 billion. And since it's given up some of those gains since then, it's valued at somewhere between the initial $10 billion and $14 billion valuation. This company,
yes, SPY completed its intraday cup
23%
and
above its IPO
making its
price.
handle now.
And it was a pandemic darling. That's
retest
something
the
that
hye.
people remember. But back then,
Find
at
today,
the height
but
of the pandemic
might not.
in
Might find it safe
when
to
the
VWAP.
company wanted to go public.
Close.
It was valued at $39 billion at $125 a share. So this is a far cry away from that.
AMC's holding up well.
The company had to drop the price because they wanted to make it more accessible to public markets. And of course, even though it's not trading around that number, it is still a big boost for the IPO market because inflationary pressures, rising interest rates,
BFS up
investors
2.5.
away from riskier assets. And this is another boost coming weeks after Kava and just a week after the IPO of ARM, which happened last week.
Down another 5% today. So it's good that they're being absorbed day one, but how far does day one take us, Kev, if investors are quick to sell the rip on these like they're doing in ARM, basically 2.5 days straight?
Well,
Cart kept coming
after
down.
The euphoria of the IPO and the return of the IPO the last few days, a little bit of reality setting in, Oliver, as the trading world starts to look at valuation here and realize that, you know, ARM is a great stock, but it's not NVIDIA. I mean, ARM is not as influential in AI as NVIDIA is. ARM is got an incredible valuation and it's incredible price to sales that it just doesn't have the fundamentals to keep up. But there's a lot of enthusiasm about it, but boy, Oliver, the valuations are just lofty, to put it nicely. You know, this market is, it almost seems, Oliver, for the last 2 days or day and 3 quarters, that those 2 IPOs have sucked all the oxygen out of everything else that we thought about trading. Now we wait for tomorrow. Tomorrow's the big day when we get kind of a roadmap for the end of the year and into early next year, and at least up to November. But it almost seems like these 2 IPOs, ARM and Instacart, have kind of distracted us from what we maybe should be paying attention to, which is valuations. And these AI stocks that have run a long way seem a little bit fatigued up here again. I'm using that word a lot, it seems, lately on the air, Oliver, fatigued. Because this market, frankly, looks a little weary up here, and it's lacking that next bit of inertia to go higher. What will it be? Might be a friendly Jerome Powell, a market-friendly Jerome Powell, which he has shown a propensity to be. But with yields where they are,
base is up 11 or 7.
Crude oil where it is right now, even though crude oil moving off those severely overbought levels, this is still a market looking at some fundamentals here, some macro fundamentals that are working against stocks, Oliver.
Indeed, well said. Challenging some of those macro fundamentals. And to your point, I like the oxygen description too. Kind of seems like the demand for the IPOs has taken some of the oxygen away from some of the other risk assets out there. NVIDIA is just kind of slumping along, down another % today. The other thing too is that, to the point about valuations, we're already kind of seeing the analyst response being a little bit more mixed. Yesterday we talked about how ARM got its first sell rating, essentially with an underperform. And then today, the only note that I think is interesting is the one saying it's a neutral, Renita. So it's not exactly like roaring fanfare, actually.
That might be the most accurate description
Head and shoulders on the 5-minute.
about this one, because this stock, of course, it opened above its IPO
Cup and
price,
handle, though.
around 25% above it. And today we see it trading at just around that opening price, but it's falling. It's been falling for the past 3 sessions, ARM. It started to fall the day after the IPO, and one analyst says that it has dropped about $8 billion in market value in just 3 days.
Yeah, wow. So it's already lost pretty healthy chunk there. Of course, if you love it, then you're going to be happy to see it drop. You know, if you loved it, if you liked it at 60, you're going to love it. 55, you liked it at 70, it's a dream down here. So I guess some perspective there. I appreciate it. Thanks, guys. Kevin Hanks, Renita Young. Joining me here in the studio, Zib Francis is the CIO at Convexitas. Tomorrow, everybody expects Powell to be totally handcuffed in his actual rate policy, but what about the outlook, Zed? Is there any potential for some surprise, some action, some conversation tomorrow?
I mean, I think tomorrow's going to be pretty boring, so I don't think I'm an outlier there. I think what's potentially more interesting tomorrow is it could allow rates to kind of finally break out of the range they've currently been stuck in. Yes.
Okay, that sounds like action to me.
Yeah, I think it's more after the event. So we'll call it Thursday, Friday next week than necessarily tomorrow. But, you know, we've been obviously drifting higher in yields, especially on the long end. Bonds have been selling off. But we've kind of gotten stuck-ish here in this, 430, 435-ish range in 10s. And I think a lot of that is simply because the predominant positioning, short rates here. It's nothing aggressive. It's nothing to say watch out for, but it's definitely a predominant positioning, meaning these known events, these calendar events usually cause a little pause. You know, you need the event to roll over, even if it's a total non-event, for things to take the next leg. So I think ultimately tomorrow's going to be pretty darn quiet. I don't think the dot plots are going to scream anything surprising at anybody.
They're not going to make it obvious if December, November is going to be on the table?
I think that would be unlikely. I think it very much the data dependent, we're going to do more if we need to. Yeah. The dot plots are not going to necessarily say we're going to start cutting next year. They're going to keep kicking the can to be like, again, data comes in, we're willing to do stuff, but it's going to be very rinse and repeat, boring. But I think just the event
Birds is halted again.
Calendar is going to allow people to
on the
take
upside.
A stronger view on their positioning.
Actually, volatility halt now.
A committee that can screw up their trade.
You think Powell likes the odds basically hovering around a coin flip for a hike this year? That's pretty much where they've been, a little bit towards
the market cap's 19 million.
43%.
Yeah, I mean, ultimately it's rounding error, right? You know, you're talking about the market pricing 12.5 basis points over the next 3 months. I mean, it's kind of a nothing. So I think they're happy with the market digesting the data dependency. We're all waiting and seeing as data rolls in. We'll make some moves, and so the market basically pricing in rounding error nothingness.
They purchased this company for what their company's worth.
I do wonder if that has the possibility to sneak up on investors, because there is still sort of that murmur that we'll have to get cuts at some point. Investors were looking for that the last 6 months. They never came. And even if the Fed is not being outright hawkish, I do wonder if kind of towing that line, riding the fence that Powell is doing, basically allows the economy some breathing room, which then naturally pushes rates up. Maybe in a good way, but perhaps not still what stock investors are looking for.
Yeah, I mean, again, rates. You're like, are we talking, obviously, 2-year, 5-year, 10-year, so on and so forth. So I think 2-year, obviously, is going to be very, very dependent on, what they do in terms of adjusting Fed funds rates and what expectations are for them to do in the near term. So 2 years is likely to be kind of boring until there's a dramatic shift that they're going to overly probably communicate. So yes, 2 staying above 5, fine, but it's going to be tough for them to go to 5.5 or 4.5 without a dramatic shift in communication. The longer end, that's not necessarily the case. That's a different animal. That's a mixture of obviously long-term inflation expectations, long-term growth expectations, but also potentially the shift in term premium on the longer end of the curve. Yes. So, us shifting from a negative term premium, i.e. we're going to earn less than inflation over 10 years by owning a 10-year bond because of the benefits that 10-year provides to me, potentially going to the more pre-2000 historical of a positive term premium. Experiencing all this duration volatility, I should get compensated for it, thus a positive term premium. So you could actually get a decent move higher in the long end of the curve. We'll call it inflation agnostic or communication agnostic from the Fed.
Okay, that's where it gets interesting, because the curve's actually been re-steepening the way we want, the bear steepening of the long end selling off, because historically, when we get to that recession time, the yield curve inverts, and everybody studied that, and they've said, okay, every time it inverts, but the timing of where the actual recession hits works a little better when the yield curve starts to steepen out. Problem is, we've got a totally different type of steepening. We've gotten this economic rejuvenation steepening. Do you think that's short-lived, or could we actually see that turn into some type of economic reawakening? I mean, I kind of know the answer based on our conversations in the past.
I think, the economy can keep, chugging along until we actually start experiencing credit issues.
Right.
And
now
that's
told us is a slow-moving train.
That's right. I was going to say, I've been boring in 2023, right? I was like, forget about inflation. That's not very important. What's more important is credit. The problem is credit's not exciting. It's boring, and it's a slow-moving train.
Oh, yeah, totally restarted my stream. That sucks.
Is really just when do
Thanks for
people
your likes, guys. Appreciate
money?
it.
When is there demand for additional credit? That's usually your early stage signal, and we're actually starting to see that, right? Credit card debt
halted again, so
heading towards all-time highs now from a household net worth and a total amount of GDP. It's not a big number off the charts. It's more of an acceleration. It's okay. We went from a low amount of credit card debt to a significant amount of credit card debt. Go ahead.
Hang on one sec, because we got credit spreads up. Let's pull up Zed's other chart real fast, which shows the personal interest payments, because that's what you're talking about.
Payments?
Yeah, so that's twofold. So credit card debt exploding.
Birds is
but
resumed.
personal interest payments are
It's on the day
everything.
traders list.
Your mortgage, your auto loan, your credit card, anything you be paying interest on And you see that dramatic pullback.
I want exposure just because I like birds.
Multi-decade chart, but the dramatic pullback at
No,
the backside of the
stupid
pandemic,
amount of
and that's
money on
everybody
birds.
refinancing. That was a huge stimulus. The economy is everybody refinancing, pulling down the amount of total interest payments that they have, which they utilize to buy things. You know, it was significant stimulus. But what we have on the other end here is a significant increase in just the total amount of money folks are spending on interest. And this chart should be as of the end of July, and these are annualized terms.
Yep.
But the point of that is
it's just nominal, though, right? Do we have to adjust this for something?
No, this is just nominal, and you should be adjusting.
So it naturally kind of goes up, but the rate of change is extreme.
The rate of change is extreme, and this doesn't even include the restart of student loan payments, because those aren't actually hitting, you know, until start of next month.
Yeah.
So that'll be in the data, you know, 3 months from now, and what you're seeing. But the point being is folks are starting to have that drain from a personal consumption to paying interest payments. On the corporate side, there's a significant increase in new issuance this month. Now, a lot of that is natural.
They bought that company for what their current market cap is.
On vacation in the summer, so you don't want to hit the market with a bunch of new issuance.
Maybe that's not hilarious. I don't know. Seems hilarious.
Back. Let's go ahead and tap the market for what your needs are. But it's a material amount. It's about $100 billion issued in credit, mostly IG, but in credit as a whole.
Okay.
Thus far this month, so 2.5 weeks, $9 billion yesterday. And it's probably going to be 150 to 200 billion by month end. Potentially upside is whether you see regional banks overissuing for expected rule changes from FDIC.
And we can't blame these companies for doing this, right? Because if we go back to that credit spread chart, they're getting good prices still.
That's right. Like, that's what's been really interesting is we've had, obviously, federal government starting to issue again. You have corporates coming back to market issuing again. You've had IPOs that you're talking about. So everybody's tapping the market right now. It's been digesting it okay, and in fact, in terms of what investors are demanding, in terms of spread to treasuries, is limited. It's in fact going the other way, right? It's like we're hitting the market, and yet credit spreads keep on tightening. So I think the slow-moving train of credit, you need to pay attention to when people actually need money. That's kind of starting to happen from individuals to corporates to governments. They're all tapping the market in need of money, but thus far the market itself is not pricing in additional credit-like risk. Whether you're looking at volatility, whether you're looking at IG credit spreads, whether you're looking at high-yield credit spreads, everything's saying everything's fine, there's no risk, keep on asking us for more money, we're willing to give it to you. But that should probably be viewed as an opportunity for folks rather than something that's likely going to be maintained for the long haul.
Sounds like what you're telling me is that the boring, slow-moving credit train is starting to pick up the pace a little bit. Which, when combined with VIX dabbling at 13, credit spreads where they are, it may not be as obvious when that tide starts to turn, but it's one that once it does, it kind of only goes one way.
Yeah, we'll call it your technical metrics of just looking at market prices telling you when risk is floating in.
Yeah.
They're probably going to be a little late to what's actually happening underneath.
All right, understood. All right, well, it does look kind of late right now. It's been quiet, judging by VIX, judging by spreads. Like the chart of the payments and interest payments. And
finish me to slow play.
Pace, even on a naturally trending higher chart. Thanks, Ed. Good perspective on the macro. Great stuff ahead of tomorrow. Joining us, CIO at Convexitas here in Chicago. Coming up, let's get a little stock specific. There was actually an earnings that you might have missed, and it's in a company that's still up over 100% in the last 3 years, AutoZone. We'll talk about the auto parts businesses, with O'Reilly being the leader, AutoZone right behind, and Advanced Auto somewhere way down below.
Oh, he's got a jacket. Oh, you. You're high there on AMC. Oh my gosh. Got the flush. blinds are crazy. Yeah, you gotta go all in. Same hand. Yeah. Oh, what? There's a full house out there. And I didn't have a kicker. Six, 2, 8. How do we have the same hand? Bad news on AMC? I don't think so. It's ripping. Jack 3. Is the blind 1 million? Half a million? Great. Oh my. I don't think I've played to the blinds getting that high. I don't know of any news on AMC. Oh, there's news.
On a comparable store sales basis, and that's a deceleration from last quarter. We were expecting a little bit of an acceleration there, and this is a business that
Valves?
the last couple of years has been growing double digits.
Good afternoon.
That's the biggest change, the biggest concern that investors have, because while it's only about 25% of the company's sales, that commercial business is one of the biggest long-term growth drivers.
So 75% is just Amir, you're going in getting parts for our cars, whatever we need. The other is like the shops, mechanics, used car dealers, et cetera, that need to fix up their fleets. Why does that slow down?
Yeah, so I think partially it's because of the tough comparisons. And during the pandemic, and really the year coming out of the pandemic, there were supply constraints that some of AutoZone's competitors had. And now those constraints have eased since the competition has increased a little bit. We've seen more price competition from some others as well, such as O'Reilly. So it's been a little bit tougher operating environment for that segment of the business.
Okay. So comp's still positive, though. I mean, it seems like a pretty high bar. Market's applying. I guess that makes sense when you're up as much as you are the last couple of years. It seems like you still have confidence in the stock, though. Outperformed 2750. Does any of that change?
No, that really doesn't change. The medium to long-term trajectory of this business is solid. This is a resilient business, especially the DIY side. Continue comp positive. We're seeing growth driven by two things. One is inflation. Even though it's slowing, it's still up low single digits. And we're seeing higher average prices of parts on an underlying basis too. And on a traffic basis, we're seeing flat to slightly down trends, which should persist as there has been a secular shift to people having their vehicles worked on for them rather than doing it themselves. So that hasn't changed. We do expect that commercial business
new high, 6.5%.
over the next couple of quarters as some of these issues shake themselves out and the company's execution improves. And this is a company that is so good at returning cash to shareholders. Really strong free cash flow, really strong buyback history. And the last thing I would point out is that we have renewed store growth. So we should see accelerating store growth going forward, both in the U.S. and also internationally. The company's now breaking out its international results. They represent over 10% of the company's sales, and they have really good returns on the business in Mexico and improving returns in Brazil. So those are growth markets.
Wow, okay. And through this sector, there's a lot of stock-specific catalysts, it seems like, because I'm kind of wondering if, as investors, we view these as being at risk of an economic slowdown. I mean, maybe on the margin, but like, it doesn't seem like they're super cyclical. I mean, otherwise, how do you get advanced auto down, well, what are we at, 60% the last year versus these other stocks going up. So I guess that speaks to what, competition or just differences in terms of financial structure? How do we have this huge gap emerging?
Yeah, I call the sector weakly cyclical or maybe even acyclical. Most of the parts that people buy
weakly
are
cyclical at
because
best.
their cars break down.
Okay.
So that's definitely a positive, resilient in a macro environment where the consumer is under pressure. The sector. When we think about this relative to Advanced Auto, Advanced struggling because of execution issues, because of inventory issues, and because of balance sheet issues. Their debt rating was just recently downgraded from investment grade to junk, and that has implications for some of their vendor financing programs. So we think that AutoZone and O'Reilly, and for that matter, Napa, which is owned by GPC, will be able to take advantage of that.
AMC still climbing here.
Share.
Okay. Hey, while we got you, let's definitely talk some Carvana since we're in the used cars. Let's go over to the vehicles themselves. Let's talk some vending machines here. Shares are trading at 48. You just upgraded from the sell to a neutral. Price target 48. I think you just made everybody happy, Seth, because the price target's where it's at, but it's no longer a sell.
Yeah. So we think that the worst dire case scenario is off the table in the near term. They are able to complete a debt exchange, so the balance sheet's in better shape, reduce the debt for the near term, improve the liquidity materially by eliminating the need to pay interest in cash for the next 2 years on most of that debt. And that creates some breathing room for the company to operate. At the same time, the business has improved materially from a profitability standpoint this year, really the last quarter or two. We expect that to continue with third quarter results into the fourth quarter. Some of it's transitory in nature associated with selling a lot of backlogged loans off the balance sheet into the ABS market. And some of that's because of pricing in the industry, which has improved, the spreads between wholesale and retail prices. So while there's upside to earnings in the next 2 quarters, the medium to long-term outlook is still not super inviting to us, so we remain neutral in the stock for the 12-month target.
All right, well, hey, not super inviting is a big improvement
I didn't need that second bet.
Some of the analysis was on this company. Not just yours, but I mean, obviously a lot of other folks that were
left alone,
staying away from it. So appreciate that in addition to the auto parts conversation, Seth. Always enjoy the convo. Wedbush Securities. Appreciate it. Coming back, let's trade some options. And we've got a car in the mix, too, as NIO is down big.
Why is this guy calling? Is he literally just landing everything?
In there. We might revisit a little credit discussion with Amex as well, and then reintroduce the Disney story.
Oh, we have nothing.
In case you missed it this morning.
Just like me.
Down all day.
I quit. Jeez, it's a tough call. Put me all in. Do it. Oh, you did have high cards, but nothing. Same hand. That was a hero call for sure. No, you're playing it right. You're doing good. Proud of you. Well, good. Well done.
Stocks that are low priced like this have big short open interest in them. You know, they don't mind this, but it's actually diluting the shares.
It's on again.
$500 million worth, and that's why you're seeing this stock under some pain. European Commission's also probed into subsidies given to some of the EV makers in China. That's also a concern. But I think the down move today and so far this year is on the capital raise. They're down 58% from year ago levels. You can see that right there on the chart.
Called.
So under some pressure today, not surprising when you dilute the shares. But you know what? Put volume was about 4 times normal daily average or 6 times normal daily average volume that we've seen over the last 5 trading sessions. So a lot of put buyers in there based on the fact that the stock's going down, right?
Yep.
At the same time, call volume
is
still about 4 times normal daily average volume that we've seen over the last week in trading.
So they're eager to buy the dip.
Yeah, some people are sticking their neck out. Those are the trades that kind of stuck out to me.
Those guys staying there.
Put buyers on that. But the one that stuck out to me was out in the November weekly cycle, the 9 strike calls. They're buying these from the open. Bought over 15,000 of them for an average debit of about $1. So the break even for these traders is about $10 to the upside now. That's about 16% higher, right? But we all know NEO is one of those stocks, low price, that 16% is not much. You need, you know, what, $1.40 to for it to go higher from here. So yeah, some people sticking their neck out and trying to buy this dip, and you know, who knows if it'll work out. Hopefully they won't have to raise more capital because that might put pressure on the stock. But you know, if you look at their, you know, they release their monthly metrics as far as deliveries and production.
I like this.
They're still increasing and still growing.
Sure.
Oh my gosh.
Tesla's putting pressure
But they've had to make price cuts like everybody else.
Yep, and that's probably part of the problem. BYD's had
Oh,
price
Diamond's
cuts.
got there.
They're the leader over there. Tesla's number 2. They've been cutting prices all year. So yeah,
Shoot, he has Diamonds, doesn't he?
In,
oh, few.
A slower
2 pair though. Wow.
Type of
They could hand.
has
Slow
this,
played me too.
under pressure.
Fisker recently did the same. You know,
Sketchy.
it's just, this is where it's another one on the list of
They say NEO's offering
down
shares
moves for growth stocks lately to tell me the market didn't quite have its head right. You know,
Ooh,
I
big
am
sell-off on NEO.
believer of the composite man theory. You know,
composite man, yeah.
Composite man theory is
Wyckoff.
that you view the market as a composite, right? All the minds, men and women, of course, add up to one being. And so the logic here should have been pretty clear,
5s.
which is that there's a company that's nascent and growing, has to catch up with extreme competition, has debt, they don't want that, they want to be able to refinance it when possible. They're going to need to pick up any extra cash they can.
Composite man's from
when they're
Wyckoff.
having to cut prices of their main product. Of course, note offerings should have been in the market's list of like high probability events.
Oh, definitely.
And we keep getting this. It started basically with Apple's story about China demand, got hit,
Pocket
you know,
nines.
like, okay, and then the story reversed, never bounced. Oracle earnings solid, crash. There's just a lot of stuff that shouldn't make these stocks necessarily go down, but they are. And I think that's the market basically looking way too rich.
Yeah, and you look at a name like Carvana, you were just talking about with Seth Bastrom from Wedbush. He raises price, he keeps it neutral in the stock, but I mean, that company should probably be raising capital while their stock price is where it is at this point.
That's what I'm saying.
But that also reveals cracks in the balance sheet of the company. Also.
Yeah, Carvana offers some shares.
Let's talk about cracks in Disney's.
Be so noble.
That's kind of another example too, which is like
Do it.
when the market
What do you
hates
have,
you
dude?
investing in the more reliable part of your business right now, the parks, the cruises.
You're going
Cruise
for
lines
it?
are doing actually very well right now.
Really well, yeah.
You know,
An
and
8?
the market freaking out because they're going to
Oh, good
invest in
game,
this
guys.
instead of lighting more money on
8 with a 2
fire
kicker.
on the streaming side.
The streaming
like,
side,
you know,
yeah. Oh, and that's the thing. You don't want to grasp hold of
AMC up
something
6.5.
that's new and it's got, you know,
0.3.
200 million subscribers across all their platforms. That you think that's going to be their growth engine when it's their bread and butter, which is, you know, they're investing $60 billion in aggregate over the next 10-year period. for their parks and cruises. I think Bob Iger's making some tough decisions here. He's basically called out to the street saying, hey, we're investing what makes us money, where we actually have the ability to grow and not lose money on an investment. This is actually an investment to make them grow. I guess somebody said the aggregate amount that they're going to spend on parks and cruises, they could build like 7 different Disneylands with this amount of money that they're spending.
Ben Watson, you know.
Yeah, is he listening?
Yeah.
But I mean, they're investing in a portion of their business that's not losing money. That's still popular. So that's not helping the stock today. It's down over 3%, down over 5% so far this year. And we saw some put buyers in there. Somebody thinking, hey, this isn't going to work out. Really short-term positioning. And the key thing, I think, on this trade, Oliver, was they were buying them right in the open. Trader bought 10,000 of the September 22nd weekly, really short-term positioning here. Let's see, the 83 strike puts. They only paid a debit of about 80 cents for these. So that break even of 82.20 over the next 3 days, basically there right now, already at that break even. Put volume, you know, a little bit above normal, but we've seen some pretty heavy volumes in there recently. This stock traded $203 in March of 2021, a year after the pandemic started, and it's now under $83 a share. So,
I meant to call that.
We're going to see some more weakness into the end of the week. Laying out capital is not going to help them in the near term.
By the way, just to be clear, when I say there's like,
I didn't realize he was a chip leader, and I'm basically doing his job for him,
quote unquote, shouldn't,
playing aggressive.
Like go and buy the dips on these. I'm actually kind of saying the opposite, which is like it's a sign that the market's very weak.
Yeah.
You know, because again, this is the type of stuff that's going to pay off for Disney long term. It's Disney. People are psychotic about it. If they build 7 parks, people would go.
Right. The other one I wanted to go all in on.
Midwest. I would crush. Are you kidding me?
I would have liked to have seen, had they come out and said, hey, we're going to spend $30 billion on Disney Plus and expanding that, and what the stock would have done. I mean, it probably going into a money-losing side of their business.
Yeah, that would have crashed even harder.
So pocket do you have?
It's just lose for Disney.
Aces, you're all in. Dang it.
Other than spinning stuff off and
10s.
selling.
Oh, you landed 10s, you jerk.
Market doesn't want to touch
game.
it. Right. Bears betting on deeper downside.
Good
Real
game.
fast, hit me with the AXP trade, American Express.
Yeah, you know, they've got the bill that's going through the Consumer Financial Protection
I'm chopping
Bureau,
around here into close. We've got 20 minutes left.
Across the board, that might be a headwind for this company. But the company
we're up pretty good on the WSOP
just a couple months
count.
Ago. You know, they've got earnings on the 20th of October, so you got to take that into consideration. But somebody betting that this thing's going to run out of more speed.
This cash game, we had a couple of huge pots in the cash game. That was crazy.
In the November 150 strike puts, you're going to catch that earnings event.
Pretty big moves for pre-FOMC, so nice today wasn't choppy for the most part. Same with yesterday, actually.
147.56. Over the next
yesterday
59 days,
wasn't choppy either. In a sense, I mean, it had chop. Of course, all the days have chop. But yesterday we had. Actually, today's moves were bigger than yesterday's. Yesterday it chopped in the morning, then it rallied. Then it sold off. Today's range is larger though. Look at this range, it's huge. So not bad. Putting us kind of right in the middle there for FOMC. Right in between our range. Right there. What are we seeing? What happens to that tomorrow? AMC is up 6.5. I'm gonna review my trades here, so get a head start. What's going on? Might even get an engulfing candle on AMC. MACD flip bullish today, or no, 4 days ago. On the daily, see if that should stick. GME is basically flat. Birds acquired a spin for 19 million, which is their current market cap. Micromobility is probably getting a pump from that news as well, I suppose. Barbecue potentially out of its barbecode range. 9%, 19.25. It's not 19 cents anymore. So I don't know. Let's see. Upwards up 9%. Neo offered shares, big sell-off from that. Let's review the trades. Let's see all the reasons why I didn't make a ton of money today. I'm green on the day though, so happy about that. So maybe I had bias this morning, I'm not sure. But remember how we were opening up at the low and I thought we'd probably bounce from there? That maybe clouded me a little bit. Yeah, anyways, open up at the low, basically right at the support from yesterday. And up a little bit, rallied up a little bit. My first trade, 943. Right here. 43. And what's it? Put. So I had the right idea. Had a bad entry. 943. This is on the minute chart. It's easier to see what's going on. That was on this big candle right here. Right here. Got a put. Oh yeah, actually those first early morning trades were fine. I just don't like to scalp. So put on this candle. Closed it actually next minute on this candle. Closed one of them. That was a profitable trade. Then close the next one on this candle. Unprofitable. Thought that was stopped out. Didn't this tell me when I'm stopped? Doesn't tell me when I'm stopped out. So maybe that was a stop out. So I get profitable on the first one, close it, and then set a stop for the second one at break even. So basically locking in profits. So stopped out on that second candle. Then opened up another put at 949. Right here. Not too bad. Little head and shoulders formed there. Here. I like it. Got two more there. And then 954, I closed one. Not bad. Held that pretty long. Closed at the low of the day. I like that. Good trade. Then put a stop. Okay, it does show stop. Never mind. That other one, I closed that. So I mainly closed that other one for a loss. Kind of strange. I mean, I guess I thought it was going to keep ripping. Whatever. So did this. Put a stop on the second one. And then the second one closed out at 955. 944, that one closed. Low of the day. And this one stopped me out. Just this little candle. Could have been slower to put that stop on there. I think that's a good strategy, definitely in the morning when it's volatile and you don't know the direction yet. So the only thing I could have done better is re-entered. But getting in and out, it takes your emotions, takes your focus every time you enter and exit. So I try and limit it. And since I'd already traded this much in this chop, I wasn't mentally prepared to get back into it right away, even if it was a good setup. Now, if I hadn't traded at all, I saw a setup for this head and shoulders and it breaking the low of the day, I would have been ready. So you've got to kind of look at your focus, exhaustion, mental exhaustion, emotional exhaustion, and just imagine it all in a tank. And you only have so much you can use during the day. So that's where not over trading helps. Not use up all your fuel. Anyways, stopped out of that one. So a little profitable, which is nice. However, I missed a lot of this down move then. And I bought a call at 10.29. Now is when I start making stupid mistakes because I saw this whole thing happen and I didn't have any exposure. Right? Then you're a little frustrated. Then you a little bit of revenge trading's trying to come in. This, that, even though I'm up. Got a call here. Right? Or no, where is it? No, it's not. It's here. It's 10.29. We're on that right shoulder. First head and shoulders. Yeah, that's what I was seeing. Trying to catch an inverse head and shoulders. We're still in down channel though. Didn't break out of the channel, so got a call there in 29. Two of them. I was just doing 2 calls and 2 puts today. Keeping my position sizing pretty much just 2. And then 1034 closed out of it. But look, I held on to that one way too long. That was definitely a problem. Open it up here. Find an entry if I want to play that. Once it breaks here, I need to be out of it. Maybe out of it 1033. I wasn't out of it until 1034, so. But actually, if I was at the top of this candle, that wouldn't have been bad, but I probably wasn't. Not a good trade anyways. But not too bad. I can accept that. Let's see, where do we start getting bad? And then we got another put. 1038. Oh, I caught this one nicely. 1038 again, had 2, got 2 of them. Alright, 1038. Got the puts there, but did catch that second leg. And then closed one. 1041. Perfect. Closed one right there at the bottom. And then bought 2 more, 1048. Right here. I think I have 3 of these things. Yeah. Oh, but these are 440 calls. There are 440s. I still have the 441s, and then I got 440 puts here. Yes, this is actually pretty good. Closed the 440 at 1053 right here. So retesting that low. Love it. And then I think I closed the rest here. Yeah, on the next candle I closed the rest. I didn't want to hold anything else. I closed. Yeah, I was out of all the puts then. I was up on the day. I wasn't up much, but I was trading small sizes, so it made sense. So that's where I should have been like, all right, good. We're chopping, whatever. 11 o'clock. From here on, I could have not traded for 4 hours. And 54. Okay, now it's the chop trades. 1107 I calls. I don't know, inverse head and shoulders, I'm not sure. Oh yeah, this one I was starting to scale into him for the reversal. Yep, I was early. You know I was early, that's why I was going slow. Bought one call 1107. Bought one at 1113. And then held them. Sold one actually up here, so that was a great exit because I wasn't certain it was already starting to reverse. It was still very early. I thought we still could come down more. So I sold here. Great exit. Or I sold 2 here, sorry. I sold both of them. Oh, so that wasn't bad. Maybe shouldn't have got those calls, but the fact that I was able to get them for a profit right here was very fortunate. So yeah, it actually still made, all right, okay. Not too bad. I got out of them when I should have. Where are we? 1143. Bought 2 more puts. Hey, this isn't too bad either. $143 got more puts. The market could have moved. It could have moved down. It could have moved up. Didn't have to necessarily just do this little chop melt thing. We've had a much bigger breakout to the downside right here. It didn't, but I had exposure to it. So 1143. Where did I go wrong today? 43. I know. It was those candles. It's the big candles that I just like freak out about and close. It was that one time. All right, so bot puts here 1143. Closed one at 1146. Right here. Closed the other one 1148. Right here. So not bad. I was taking profits. Even though I thought at this point it's gonna flush through. Maybe. The fact that it held on the support, I'm like, I'll just take them off, that's fine. So shouldn't have traded in this chop, but was able to profit on those. Alright, so calls. Back into buying calls. 1149. Too soon, Junior. Bought 2 there. Yeah, this was a bad trade. Sold them here. Sold 2 of them there. That was an L. That was the first L in the day, I think. Yeah, small L. Okay, back into calls. 1157. My entries aren't on the support. It's after I think the momentum. Okay. Back in the calls here, 1157. Rallied up a bit. I didn't close it. This was the problem here. I just didn't hold. Or maybe I should have gotten in those middle of the day chop. Alright, 1157 and then 12 bought more. So bought more right here. Very interesting. Averaged into it there. Oh. That was an unusual average in. Shouldn't have done that. And 1205. Closed all of them. That was the panic sell, which I shouldn't have done. Right here on that candle. No, it wasn't even like before that candle. Close some more right here. It says 1205 was before that big candle. That was good, but that was a loss. That was a pretty big loss actually. 55 cents and 57 cents were the buys, and the sells were all 39 cents. That took out pretty much the small profits I had prior, I think. No problem. I can just take a break, wait for it to set up, do that end of day move, afternoon move, whatever it's going to be. Where are we at? And Okay, yeah. All right, buying calls again. 12.15 and 12.26. So I'm starting to scale into them again. At least I was at a lower. 12.15. 12.14 and 12.26. 12.14 is not bad. And then 12.26. Bought another call. Then sold both those at 12.47. This was the bad. That was the bad trade. See that? This was the flushy candle that. Yeah, this was the bad one. I still had profits after that one. It was this one that I, if I just held through, believed in the thesis of it slowing and starting to reverse. However, I really should have stopped out much sooner. I didn't. So then, since I was down on it, then I'm trading out of emotion. I see big candles. Yeah, so I closed those calls right here. Yep, right where I should have been opening calls. Then you gotta take a break. Then you can start whipsawing. That was what? 12.47. Close those calls. However, okay. So not too bad. Close those at 12.47, 22. And then I realized what I'd done. I realized that was an emotional trade, emotional close, and everything's still good. I actually opened calls back up at 12.47.48. I didn't realize it was literally right then. Snapped out of it. Took a breath. And opened up calls back up. That wasn't really much of a loser then. There's just some of that back there. I mean, this was, but I basically bought right back in. Oh, no. No, what did I do? No. I bought back in. Yes. I bought puts. This is the whipsaw. I got puts. I did. 12.47. Got 2 puts. Closed them at 12.53. So right here. So I'd realized what I basically had done. But this little messed up profits. Closed the puts here. Realized, okay, I have to skip a step on my whipsaw and then get back into rhythm, basically. It's like when you're out of rhythm on the teeter-totter, and then you start just bouncing and bobbing off of it, breaking your tailbone. You get back in that rhythm. Where are we at? 12.53. Close those calls. And then I started slowly scaling into call, or close those puts. It started slowly scaling into calls. Could have gone heavy into calls, but I wasn't sure if it was just a little bounce or we're actually reversing. And I wanted to be careful about position sizing and stuff. So slowly started scaling into calls. Bought one call there at 12.53. Given it was much more expensive than, I closed them down here, bottom here. Yeah, so this little section, the candles, all designed on purpose, all purposefully designed. Get you out. 12.53, bought one call. 12.54, I started buying a little quicker than that once I saw what was going on. Bought another call, 12.54. Then 12.59, bought another one. Be on that red candle. Trying to get good entries, it was like just started ripping. And those 3 calls are what saved the account today. Just 3. That was all my buying power left. These straight. Can be easy. 112, I sold my first one. Right here. At the high. The resistance. We could see we still could have kept coming down. This is a hard sell, this one, because I'm still down on the account. Still down on the day. Still down on my options. It's hard to sell. To like realize to realize losses, basically. To cut losses. So what you call it? I don't know what you even say. yeah, just to realize less losses than your losses down here. So anyway, sold one there. Felt a little better. Losses weren't that bad then. Kept going up. That felt even better. Sold one up there, 122. Right at VWAP. Perfect sell. Okay. Count's not quite terrible anymore. But I only have one contract left. That's the thing. I have one left. I was like, this VWAP might be the high of the day. Held through all this. In hopes. Yes, sir. We had this move. That's the last one right here. Right there. Now if I had buying power, I would have bought back in. And that was the small account, which is up 1.5% on the day. Now if I had buying power, I would have bought back in, because with my other account, I bought back in here on this break. I would have reloaded with my small account too. On the break of VWAP there. And those ones, I sold some here, and sold some here. Those ones did the best. Those, if I was bringing those profits into my small account's up, I don't know, like 20% today. But I'm not going to count that because that's cheating with my other account. But yeah, if I had more buying power down here, I could have averaged in and scaled into calls as I saw the move was actually happening. It would have been much more aggressive, but by that point I'd already given away some profits and my buying power is depleted. Here we are. It's the end of the day. I want to try and review my trades. More for my benefit, but you guys can stick around and hear what's in my head. GME's down a little bit on the day. SPY is down 0.2%. AMC is up 6. What birds do? I did do some theta plays today. You guys are theta members. I sent those out. Yeah. Thanks so much for your support today, guys. Appreciate it. Did good in poker, at least. No, I'm actually stoked that I had buying power on the other account. I could get the calls for this rip. This was crazy. They were even tomorrow's, and they still did. I don't know. I think we did $400 or $500 on them. That was nice. All right, Tasty. Sorry, I was not watching chat. Get a haircut. Freshly fresh. 0 day for feds. Tomorrow will be, yes, the Fed day are kind of crazy. You got to be careful. Small scale, small sizing, because you're going to get big moves usually. I don't know what trader's saying is good guts, but I appreciate it. You have some November calls, Tasty, on Tesla, and a boatload of GME shares. SPY were nice today, but I didn't react fast enough. We'll be down to do some tomorrow. Yeah, so you're basically betting on a bullish FOMC. Because GME and Tesla are both going to move with the market. GME looks bearish to me still. Tesla does also, actually, so I would be quick to cut losses on those if it turns that way. Anyways, you're putting out there. Ace for president, have my 6th round, or however he says it. Later, Taze. Thanks, man. All right, Guts. All right, Dink. Thank you, guys. Appreciate it. Get the support today. Ori, thank you for your donation. You guys for likes. Sorry, I don't know why the stream like cut off and then went back on and buffering and doing it again, isn't it? Yeah, we're not getting good stream health. I don't know what's going on. Well, that's what I got. Thanks guys for watching. Sub up, like up, comment down. Happy money sticks around. That's what it is, Tasty. We'll see you guys in Discord.